Fast fashion giant Shein confidentially filed paperwork to list on the London Stock Exchange. That's according to several reports. Now, the retailer has strong ties to China. It previously did try to confidentially file in the U.S., but failed to win broader support, in part due to its use of forced labor practices in its supply chain. So what does this tell us about the state of play for IPOs and company listing decisions? For more on this, we bring in Doug Adams, Citi's co-head of equity capital markets. Doug, thanks for coming in studio with us. I bring up the example of Shein just to get us started about how companies are thinking about where they're going to list when they're making these decisions. What do you think is the biggest driver of that right now?
I think part of it depends a little bit on, first, thank you for having me today. Really appreciate it. Pleasure to be here. Part of the decision goes into where's their client base, how do they think about their business, how well are they known in certain markets, where are the comparables that they may look to for from a valuation perspective, and also where the target investor universe is. So there's a lot of different dynamics that go into how companies think about the IPO process, where to list, and importantly, when to list. We've seen a pretty significant increase in activity, as you know, versus where we were last year at this point. We're up about 80% in the US, similar levels globally. And I think that's a very constructive environment for companies and for investors.
Yeah, Doug, talk to us a little bit more about that activity, because we certainly have seen an increase in the IPO activity going back over the last couple of months. What does that signal just in terms of the second half of the year? Lots of uncertainty, obviously, when it comes to the Fed, when it comes to rates, when it even comes to the election. Do you think we'll see some of that IPO activity sidelined until towards the end of the year, or how are companies thinking about that?
Look, the pipeline is absolutely building. The dialogue is great. I think companies are still trying to work through some of that. Part of it is the market dynamics, but part of it is their own performance. I think lots of companies are going through their forecasting exercises. How would they have done if they were a public company? And so the one thing we do know is companies will be better prepared to be public companies when they come. I'm not sure if it's all going to come in the second half of 2024. Probably not. When we think about the windows of going public between now and the end of the year, we've got a couple of windows, but there's a lot of uncertainty as you talk about. I do think 25 and 26, we're going to see a significant amount of that pipeline come to market.
What's the catalyst for those companies getting off this island? Is it just simply looking at their business? I guess how much of the macro factors have been factoring into some of these decisions versus just the stability of their own balance sheet?
I think the macro factors are influencing individual company performance, and so they're trying to factor that in. So we spend a lot of times with companies talking about what are their KPIs that they'd go to market and how would they perform relative to those KPIs if they had been public. And importantly, against their forecasts, how would they perform? And so given the rate environment, given some of the economic aspects, given regulatory challenges that some companies face, that's factored into it. And so they're trying to weigh all of this and decide when is the right time to go public and be a good public company, not just go public.
Obviously, the rate cycle is one big factor for these companies, but I'm curious about, from an equities perspective, just the crazy valuations that we've seen. Are you seeing that have an impact on what companies are expecting when it comes to valuations heading into IPOs? Are they looking around and thinking, how do I not have the biggest valuation possible before this IPO?
Yeah, valuations are certainly one of the drivers for companies to go public, but it's one of the drivers. Oftentimes it's what does it mean to be a public company? What is the strategic value of being a public company, the branding? So yes, it's important for going public, but then the sustainability of that in the aftermarket also becomes important. And so lots of companies trying to evaluate, when is the right time to go? How do I think about valuation near term, but also longer term? And what are the growth and margin aspects that they're trying to project to the market?
What are you seeing in terms of the take private activity? Because I believe right around record levels, right?
Yeah, we are. Look, there are a lot of companies. We focus on what the indexes have done, and the S&P is up 15% year to date. And when you look at the equal weighted index, not every company has actually performed at that level. NVIDIA is about a third of that performance year to date. And so lots of companies haven't been caught in this updraft that we've seen in the broader equity markets. And so for some of them, they have to wonder whether or not they're getting properly valued in the public market. So we have seen an increase in activity of companies thinking about, am I better valued in the private market than in the public market at this period in time?
What is that decision looking like then for those companies? Do you expect, to your point, Shauna, do you expect that to continue to be a trend moving forward?
I think there's a lot of money in private equity hands. Mm-hmm. It's closing in on $3 trillion. You folks have talked about it on many of your broadcasts as well. So the real question is, how do we think about the trade-off of being a public company, the value of being a public company versus the value of being a private company? And so every company kind of evaluates that. Their boards evaluate it, the management teams evaluate it, and really trying to figure out how best to get value for all of their stakeholders.
Mm-hmm. All right, Doug, we got to leave it there, but thank you so much for joining us. We really appreciate it. Thanks for coming in as well. That was Doug Adams. He is Citi's co-head of equity capital markets.